Hello everyone and a very warm welcome to all of you. Today I'm going to share with you some key highlights from Crisil Ratings' recent study on co-lending by NBFCs. The study covered around 100 NBFCs, accounting for over 90% of the sector's assets under management. Our two key takeaways from the study are: 1. Co-lending AUM of NBFCs is nearing rupees 1 lakh crore after more than 5 years since the model came into being. Over the medium term, growth momentum is seen healthy at around 35 to 40% per annum amidst rising interests of partners, that is both NBFCs as well as banks. And the second takeaway is that while personal loans is the biggest asset class within co-lending, given the higher risk weights for unsecured consumer credit, we may see higher focus on other asset classes such as loans to micro, small and medium enterprises (MSME) and home loans going forward. Co-lending is seen as a win-win for NBFCs and banks alike as it allows sharing of risk and rewards. For NBFCs, particularly for mid-sized and smaller ones, it enables access to bank funding as well as diversification in funding avenues. This becomes even more relevant in light of the recent increase in risk weights for bank lending to NBFCs. The model also allows NBFCs to grow in a capital efficient manner. For banks, on the other hand, it provides optimal access to niche customers in geographies and also aids them in meeting their priority sector lending targets. In terms of asset classes, within the overall co-lending book, personal loans alone account for about one third of the AUM, followed by housing loans at around 20%, and unsecured MSME loans and gold loans each making up about 13% of the pie. While co-lending books for all asset classes will grow, the pace of growth for personal loans is expected to be slower than that seen in the recent past. This is because of the revision in the risk weight of unsecured consumer credit to 125% now from 100% earlier, which would lead to some recalibration in the growth strategy for unsecured loans. However, the focus is likely to shift to other asset classes of MSME and housing loans. So net, co-lending will continue to see increased traction as NBFCs look for alternative funding sources to cater to the healthy underlying demand for retail loans. On that note, I thank you for your time and attention. Goodbye.